I believe that in this cycle, sometime next year, we'll probably see 180, 200, maybe higher. I don't think we'll see 1 million in this cycle. And I think off of that, by the way, off of that 180 or 200, when the last people come in and everyone gets all levered up, guess what? We'll probably have a 50% correction and come back, to clean out a lot of people. And that's sad. I mean, I'm very comfortable buying it right here at 200. I might slow my buying down a little bit, expecting a correction. I mean, things zigzag.
Your 5-year target, you have a target.
My 5-year target, Bitcoin's $1 million easily, I think.
And you have a 10-year target as well.
My 10-year target, probably 3 to 10. I mean, I don't know. It kind of depends on if we get hyper Bitcoinization or not. See, the tough thing about these targets, Michelle, is that it depends a lot on the policy responses of the government.
Sure.
In his opening remarks, Lawrence Lepard addresses one of the main issues in cryptocurrency, the fluctuating prices of Bitcoin. He claims that further volatility is unavoidable, pointing out that the asset has already experienced several dips of more than 50%. However, that is not a flaw, according to Lepard. Rather, it is precisely what one would anticipate from a new currency that is being widely accepted. Bitcoin is following the same growth path as gold, which had to establish itself centuries ago in order to become a dominating monetary asset. By demonstrating why volatility is a sign of strength and early-stage potential rather than a reason to avoid it, Lepard turns the stability argument on its head. For further updates on Bitcoin and the wider world of digital assets, please take a moment to like this video, subscribe to the channel, and enable post notifications before we go any further. Thanks, and enjoy the video.
But let's go on that stability, because that is one of the core characteristics of sound money.
Yeah, it's a weakness of Bitcoin. There's no doubt about it. I mean, it's a very volatile asset. It's had multiple drawdowns of over 50%, and they could occur some point in the future. But I think that's very typical of any new sound money in the process of adoption. I like to say we're trying to put the ocean into a swimming pool, and we got to grow the size of the swimming pool. And so very much the way that Amazon bounced around, had multiple 50% drawdowns, but went on to become the leading online seller of goods and services. Bitcoin, I think, is going to become a leading, if not the leading currency. But in dollar terms, it fluctuates quite a bit. Now, I'd flip that on its head and say Bitcoin's quite stable. One coin's one coin. These dollars, boy, who knows what the hell they're worth. Sometimes they're worth a lot of Bitcoin. Sometimes they're not worth much at all. So, you can kind of turn it on its head. But there's no doubt that Bitcoin is a less stable store of value than gold. And if one is just looking for stability, as many of my older clients are, they're pretty much heavily invested in gold. But what I would suggest to them is that, having zero Bitcoin is crazy, because the optionality and the asymmetry in Bitcoin is so substantial that even a 1%, 5%, or 10% allocation, over a 10 or a 20-year time frame. I mean, if I'm correct, I believe Bitcoin will 10x in the next 5 or 6 years. And I think in the following 5 or 6 years after that, it will 10x again. So if that's the case, and you had a 1% allocation to Bitcoin today, it would become, all other things being equal, 10% in 5 years, and then it would become 100% in 10 years. And that's, most people can afford to lose 1% of their portfolio. They lose a lot more than that doing other stupid things. So, and the book says, and I strongly believe, Michelle, that the average person, I mean, I was writing the book actually for the average American. Most of them have all of their 401k in the stock market, which, by the way, right now is not cheap. I mean, your conversation with Chris Irons at Quote the Raven really explored that in great detail. I love that conversation. And it's kind of like, guys, we're in a monetary crisis. I mean, we got gold going up like crazy. We got Bitcoin going up like crazy. And, you need to think about having some of these sound money assets. If you don't have 20, 40% of these sound money assets, you're going to be really sorry that you don't. And let me just describe a problem I'm seeing a lot with people I talked about now, because I'm starting to get phone calls like, hey, you were right. Gosh, Bitcoin's done well. Gosh, gold's doing well. Gosh, I want to get in, but it feels like it's too late. I missed it. You bought gold at 300. You bought it at 1,000. You bought it at 2,000. You bought Bitcoin at 5,000, whatever. You bought it a lot cheaper. It's too expensive. And I flip that on its head and I say, look, guys, let's just use a metaphor here. Let's say fiat currency is the Titanic. And it may not be. It may not be going down, but it's got some of the same characteristics. And, okay. And let's say gold and Bitcoin are the lifeboats outside of the Titanic, right? They can't print it. And so, yeah, I bought a seat on the Titanic at $300 when I bought my first Bitcoin. And I bought a seat on the Titanic at $300 or a seat on the lifeboat when I bought my first gold at $300. And I've been buying them all along. I paid much higher prices over the years. Okay, so now the seat to you is, $3,500 for an ounce of gold, and, $112,000, or today it's $108,000 for a full Bitcoin. You don't need to buy a full one. You could buy 10,000 or 5, you buy whatever fraction you want. So that's a higher price, but do you want the seat on the lifeboat or don't you? Would you prefer to stay on the Titanic? And so, Again, it's a metaphor, and I'm not 100% sure that fiat currency is going to completely fail, but it sure seems to be sinking. So, to me, that's again why I wrote the book. I just want people to be aware that we are in a situation where sound money is really becoming quite important. And actually, I don't think we're that late. I mean, if you go out and you look at all the financial assets, the $900 trillion of financial assets out in the world, gold is 20. So what's 20 over 900? That's a small percent. And Bitcoin is 2 trillion out of 900. It's like 0.2% of all the assets. So, we got some room to grow here. They can go higher.
According to Lawrence Lepard, a reset of the global financial system is imminent. He believes that the public's confidence in paper money is quickly declining, and that governments have issued too much fiat money. There are two ways he can go forward. In one, authorities choose to revert back to a gold-backed monetary system after finally realizing that decades of economics have failed. In order to boost confidence and partially support the money supply, gold would need to be revalued at a significantly higher price. In another way, Bitcoin, sometimes referred to as digital gold, might fill a comparable void by acting as a cutting-edge, decentralized substitute to restore confidence in currency. Please take a moment to like this video, subscribe to the channel, and enable post notifications for future Bitcoin, macroeconomic, and digital asset content before we go any further. Now, let's get into his powerful predictions.
With where you see the price of Bitcoin going. Because as I said, you have gold as
nice one. We're actually in a tough place right now. It's at 108. I see all kinds of kvetching and people worried about it, scared, and who knows, maybe it breaks down to 102. I don't really care. I'm quite confident that this is just a shakeout. We're getting rid of a few of the tourists, and that by the end of the year we'll be at 140.
Right.
I don't think this cycle's dead. I don't think this cycle's over. We're kind of right at the power law value for where it ought to be right now, and we tend to go up to a kind of one standard deviation above that. I believe that in this cycle, sometime next year, we'll probably see 180, 200, maybe higher. I don't think we'll see 1 million in the cycle. And I think off of that 180 or 200, when, the last people come in and everyone gets all levered up, guess what? We'll probably have a 50% correction and come back, to clean out a lot of people. And that's sad. I mean, I'm very comfortable buying it right here at 200. I might slow my buying down a little bit, expecting a correction. I mean, things zigzag.
Your 5-year targets, you have a target.
My 5-year target, Bitcoin's $1 million easily, I think.
And you have a 10-year target as well.
My 10-year target, probably 3 to 10. I mean, I don't know. It kind of depends on if we get hyper Bitcoinization or not. See, the tough thing about these targets, Michelle, is that it depends a lot on the policy responses of the government. Sure. It depends on. I mean, look, I wrote this book and I called it The Big Print, and I don't want to look like an idiot, and I really hope they do a big print within 5 years. I'm pretty sure mathematically they have to. And if they do, maybe maybe I'll get a wider readership and people say, hey, that guy was smart. But there's some possibility they can kick the can for 5 years. I don't see it, but I've been wrong before and I could be again. So a lot of it depends on the policy responses. But let's shift over to gold, because I think gold is even more interesting. So we're at 3,500. I think we're at 4,000. We're at between 4,000 and 5,000 by the end of the year. We are really in the accelerating and exciting part of the silver and gold market, right? So silver's at 40. I think it'll take out 50 this year. And I think, in a 2-year window, probably gold's heading between 7 and 10, and silver's heading to 100 plus, in a 2-year, if you give me a 2-year window. And that's because what's going on is, you got to remember, there still aren't that many people here. You're a sound money person. I'm a sound money person. We're in this little echo chamber. I've sold 40,000 books. Well, there are 330 million Americans who have no clue what the hell's going on. And wait until they wake up, and then inflation just keeps persisting. Look at the stock market, for example. Gold stock ETFs have been losing dollars. It's amazing. Gold, the GDXJ is up 70% year to date. My fund is the same or better. And yet they are losing dollars. Until recently, I'd have people who wanted to get out of my fund. And, people just aren't here yet. They just, and it's because they don't really realize what's going on. They've been normalized into thinking, oh, the Fed's got it under control. We're going to go back to low inflation. And that's just not true. We are not going back to low inflation. It's going to get worse. It's going to get much, much worse. If that's the one thing I would pound on the table, I've listened to all your interviews recently, and I haven't really heard anybody talk about that with great conviction. But I have enormous conviction that inflation is going to get really bad in the next 3 to 5 years, really bad. And as it does, and people realize that that's not good for the average stock, and that it's really good for gold, silver, and gold and silver mining stocks and Bitcoin, some of that money is coming over here. There's stock markets, a 25 maybe a 30 billion or 30, my figures are $30 trillion market, I think. And the gold, total gold, all the gold stocks in the world aren't worth $500 billion. So, if we get some people saying, hey, you know what, my stocks aren't doing so well, those gold stocks are on fire, they're coming after my stuff. That's what's going to happen. And if you look at historically when we were on a gold standard, and you don't have to be fully reserved, you don't have to have every dollar backed by an equal amount of gold, but you generally got to be 30 or 40% reserved. We need to be at a gold price of between $20,000 and $90,000 an ounce, and we're at 3,500. So that's how much fiat money we've created. And so, what I think the government would need to do is it would need to say, look, in my view, what they should do is they should come out and say, look, Keynesianism is broken. Debt's a bad thing. We are going to now create a new dollar. 10 old dollars is worth one new dollar, and one new dollar is exchangeable into gold at X rate. And the government stands ready to buy or sell gold at that rate. And we are now back on the gold standard. And fully convertible, both
fully
ways.
Convertible?
Fully convertible. Yep. Back, at the price. Now, it doesn't have to back all the money supply, but the price would then equilibrate to a point at which people trusted the money, right? If they set it too high, everybody would be turning their gold in to get dollars. And if they set it too low, everybody would be buying gold, shoving the price up.
The importance of Lepard's big vision for viewers should be emphasized as the video comes to a close. He's not just forecasting prices. He's explaining a profound change in the financial system. For many years, people believed central banks could control debt and inflation without facing any repercussions. Lepard warns that this notion is eroding. If he is correct, the upcoming years will be characterized by steadily rising inflation, declining purchasing power, and a decline in confidence in conventional assets. Assets that cannot be printed at will, such as gold, silver, and Bitcoin, would thrive in that atmosphere. Lepard believes that because most investors haven't realized the issue yet, we're still in the early stages of this cycle. A reset is no longer a fantasy, he says. The old monetary mechanism is running its course, whether it is through unchecked inflation or a formal dollar backed by gold. This implies that there is still time for regular investors to get a head start. The echo chamber of proponents of sound money may soon gain traction as people rush to hard, limited assets. This conclusion supports Lepard's main thesis, which is that one of the biggest wealth changes in history is about to commence. When fiat currencies falter, those who comprehend the dynamics of sound money now and behave appropriately may end up winning. Remember to like this video, subscribe to the channel, and enable notifications if you thought his viewpoint was helpful so you don't miss any updates. We'd love to know what you think about the future of cryptocurrency markets, so please share your ideas in the comments section. We appreciate your time and hope to see you in the next video.